Okay, we're looking at a 4 hour chart. Bitcoin dollar. It has hit our first projected take profit level here at the 7,000 level. Uh, this was actually a continuation breakout trade on the 1 hour time frame. I'll go ahead and show that here. So to get more detailed information about how we're trading this and how we're trading breakouts and things like that, this is the 1 hour time frame, and this is the entry in the first take profit level there. But I want to go back to this 4 hour chart here to show you the projected price targets based on this Fibonacci retracement using the Fibonacci tool. So a few things here, and the reason why I'm making this video is because very often I'll post some videos and talk about possible breakouts, and at times they haven't set up just yet. So I'm sort of thinking down the road, sort of laying out a little trade plan there and an idea, and then when it happens, that information, when I call out those trades, is reserved for Bitcoin Boss members. So when they get into the trading course, they get access to those email updates and trade alerts and trade ideas. So that information is more or less reserved for them. I apologize for that. The free information, obviously, I'm just kind of posting out some ideas and giving people the basic understanding of the strategies that we're using and then how we're calculating and finding our projected take profit levels, including stop loss. Stop loss is also a very important thing to consider. A lot of people get it wrong in the beginning, a lot of traders. They're using stop loss levels based on their threshold tolerance, like, how much pain can they withstand, and they're usually staring at the numbers and the dollar amounts in their trading platform rather than focusing on what price is doing and how the price, the structure of the movement, the price structure patterns, A, B, C, D, price swings, and things like that I talk about in the coaching course. They're not paying attention to those things. They're just looking at the money. That's going to prevent you from really making solid trading decisions. And very often when you do that, especially if you've experienced a lot of pain and a lot of loss, it will change your trade plan. I mean, you're going to be constantly changing it. I know because I did all that. So when I started trading back in 2001, I know what these mistakes are. I made those mistakes, and I had to figure out how to stop behaving that way. Like if I continued to behave down that way, the road down that path is just loss. I mean, you lose everything and you can't come back to work the next day when you've blown up an account, right? You've got to refund your account. And very often what happens is people will blow up a few accounts and then they just say, I can't figure it out. It's just my dream, but I can't figure it out. Is it really your dream? First of all, that's the one thing I would ask anybody. Is it really, really your dream? Like, how committed are you? And if you're committed, then you've got to find out the reason why you're making these mistakes and which mistakes you're making, and then figure out ways to avoid or stop yourself from making those mistakes. It takes a lot of effort and a lot of work. So a lot of that information, again, is shared and posted in the membership site for Bitcoin Boss members. And then the free information, again, I'm just answering questions. I get a lot of questions, and when they pile up in my email and they seem to be the same questions over and over again, very often I'll try to share that information with these videos, these free videos. So please, I apologize that I'm not laying everything out. It would take hours to walk through these strategies from start to finish. Why the stop loss, why the take profit, why the precise entry. Every one of my trades is that precise. You know exactly when to get in, where to take profits, and what to use as a stop loss. And so I guess I just go back to why I'm making this video here, is that the questions have been piling up since last week when we talked about what would be the next level for a breakout to trade it to the upside. So I made we did a webinar and I made a video last week, and we talked about the larger time frames and my expectation about whether or not price is likely to go, back up to the 10,000 or the 20,000 level anytime soon. And even though we're seeing this nice move here, excuse me, that does not mean in any way that it's time to start loading up on Bitcoin. And I see that all of the time with inexperienced trading gurus who go out and start these YouTube channels and start these blogs, and they're trying to sell their coaching courses or whatever it is that they're doing. They've been trading maybe 6 months, 8 months, maybe a year and a half, maybe even 3 years. And to me, and I'm not just saying that because of the amount of experience that I have, but to me, I think that a well-rounded trader with a lot of experience is one who has traded through different major crisis events, whether it's like with Bitcoin when it rallied up to almost 20,000 and then collapsed. that in itself, I mean, a lot of people were asking, is it a bubble? Is it a bubble? I mean, you just saw it all over the internet and social media sites. But we're talking about, and I talked about this in the webinar, that it's the same basic pattern and the same trader psychology behind all of that. We saw it with gold, we saw it with oil. I mean, it's been going on since the history of trading. It's always the markets react that way. And I think that a well-rounded trader who should be, at that point, if you decide to listen to him, should be one who's traded through events like that, major market crisis, major market crashes, and has successfully traded through it. So these strategies that we use here, the one that we're talking about right now and we're looking at on the chart, this is the continuation breakout trade, and this is the first technique that I used or developed, and I used it all through the global financial meltdown. That was like my first big experience with a big event like that. Back in 2008 is when it started up, 2009, 2010. I mean, the aftermath, the constant, analysis, where's the bottom, is it really a bounce, all of that. I mean, there's so much to take into consideration. It can take a long time. It can take a few years. But during that event and during all of those months and all of those years, I continued to use this particular strategy because it's built on solid market principles. That's the way I like to refer it to as this particular technique, and the structure, the outline of what it is that I'm doing. I'm taking solid market principles. I'm not using fad trading strategies and techniques. I tried that in the beginning. It didn't work. I went to a lot of forums and blogs, and people had these simple little moving average techniques, and they were posting it like it was the next holy grail, all of these different things that was going to, was going to change your life. And then they collapse. They don't work. I mean, they're not based on really anything other than maybe some technicals. You've got to take into consideration a lot of different factors as to why price moves, how far you can expect it to go. Is there that momentum in the participation, all of that. So I teach all of that in the Bitcoin Boss trading course, and including this particular strategy right here and these projected take profit levels. So for those of you who are not in the Bitcoin Boss membership site, this is for you. You watched a few videos. If you watched a few videos on the website, some free videos, I want to give you this follow-up to let you know what it is that I'm doing. But I want you to know that if something changes between now and maybe there's a reversal or it starts to approach some of these take profit levels that you see here on the screen, you might not be there to get access to that inside information that I'm sending to my members first. That's my first priority, is to make sure that they're taken care of and they're making the right choices and I have to help them avoid making those mistakes that usually puts people out of business. So again, please understand that my commitment, of course, is to my members in the membership area, and I have to make sure. And sometimes I just run out of time. There isn't always a lot of time to, especially with trading, coaching, and putting all of this together. There just isn't a lot of time sometimes to go back in, and of course, go back and make another 30-minute, 40-minute free video and then make sure that gets out and send that out. So I apologize for that, for not being able to always be there for you, even if you're watching these free videos. But let's go ahead and walk through what we've done here. So at this point, scaling out of a trade is always a very, very smart idea. The 7,000 level is a major psychological level. Now, I teach these strategies. I teach what would be a potential price target for me and for my students based on this technique. This is a specific technique, and each one of my techniques has a specific entry, stop loss, and take profit level. Otherwise, if I don't have a take profit level, I'm not taking the trade. I don't want to scalp. A lot of people scalp. I started scalping when I first started trading, and I found myself constantly changing my trade plan. Sometimes I would take 14 points. Sometimes I would take 7 points. Next time I would take 27 points. I mean, sometimes I was just lucky enough to get into the trade when the market seemed to be moving quickly. And being a new trader back in 2001, the first couple of weeks when I started trading, first couple of months, when I got caught up in some of these trades that would move in my favor, I would think, wow, I'm a genius. Like, this is great. I can't believe this is happening. But I didn't even know why it was happening. I didn't know if it was trading off of technical levels. I didn't know if there was news, political statements, comments, something like that was going on. I had no idea. Just sometimes I got lucky to get into those trades where it was like that roller coaster ride. You just hold on and it just goes. But with that mentality, I still didn't have a specific take profit level where I could say, okay, I'm going to duplicate this. I'm going to do this over and over again. I don't care how much further it goes after I take my profits. I know that sometimes it's going to go beyond my take profit targets sometimes, but I've calculated the distances that these trades would normally go to after breakouts, so I need to stick to the trade plan. The trade plan says I take profits at this specific level. I'm here to make money. I'm not here to be right. Of course, being right means that I'm going to make money, but that's not what my focus is. My focus is to make money. My focus is to preserve and to protect capital. I don't want to make mistakes. The only thing that I can control is my behavior. So I have to honor and respect that take profit plan, that level. I've got to take profits. Otherwise, I'm not going to get paid. So when I started using some of these strategies that I developed, like, for example, the continuation breakout trade, one of the first things I needed to do was figure out the entry. Then I needed to figure out where to take profits, because sometimes I would get into these trades and I would think, wow, I'm up 70 points. This is cool. I want 100 points. But it didn't go 100 points. And then it would roll all the way back down and I would be up 50 points and then up 40 points and would keep rolling down, and I would think, why didn't I take profits? And then I was frustrated. I didn't know where to take profits. So I could figure out, I figured out the entry, but then I needed to figure out the take profit level. And of course, you also have to use the appropriate stop loss. You can't just pick a number, right? Successful, experienced traders are counting on the fact that you don't know where to put your stop loss, because that's where we can either take profits, add more, and take advantage of those. There's a lot of different things that you can do with that information, knowing that most of the inexperienced traders out there are going to react in a certain way, and a lot of it is due to the fact that they don't know where to put their stop loss. They're just looking at the pain, right? I talked about that earlier. They're looking at the pain in their trading account. They're looking at the dollar amount, how much money they're losing, and then that's what determines when they decide to close the trade. How many times have you been in a trade where you're losing, right? You've got to take profit level, and you swear you know where it's going to go, and you really believe it, and you're down money, it's pulling back, and then you close out the trade, and then within an hour or two, or maybe even 15 minutes, or even a day, it eventually goes up to your take profit level, and you think, why didn't you just hold on a little bit longer? You didn't know where to put your stop loss in most cases in a situation like that. And again, that is what experienced traders, professional traders, are counting on, the fact that you don't know how to handle that situation. You need to know how to do all of these things. So again, when I say my techniques involve a precise entry, precise take profit levels, and an exact stop loss, you've got to honor those, all three of them. When I talk about controlling my own behavior, and I can't control the market, all I can do is control my behavior. One of the things I started to focus on, and this might be a really good tip for you right now if you're struggling, one of the things I really focused on was grading my trades, not sitting down at my desk and saying, okay, I need to make $1,000 today. I've got to find trades that are going to make $1,000, because sometimes you're going to sit down at the desk and you're going to look for a trade and there isn't anything to trade, right? It may be going sideways and flat. There just might not be a whole lot going on at that time. That is a possibility. And if you sit down insisting that you need to make money, and that's all the time that you got to trade, you're going to get into the market. You're going to force a trade where it doesn't belong. You're going to do something that you don't understand, and you're not going to make any money. You're going to end up with a loss. Again, you're just going to compound that problem. So what I did was, instead of sitting down and saying, I need to make $1,000 today. Well, I know I need to make $1,000 today, if that's my number, let's just say. But if I need to make $1,000 a day, or that's what I would like to do, of course, you got to remember, you can only do what the market's allowing you to do. You've got to pay attention to what the market is doing. But when you sit down, you've got to control yourself. So when I get into these trades, it's not so much how much money did I make, how many points did I make. It's, did I do everything right according to my trade plan? So I graded my behavior. When I got into a trade, if I got a number one trade, that means I did everything perfect. I got in at the price location. I didn't hesitate at all. I used the exact take profit level. I didn't cut out the trade too soon, because I knew where to trade it to based on my trade, the technique that I was using. And I used the appropriate stop loss. I didn't change the stop loss. That's a perfect trade, right? Perfect number one. I want as many number ones as I can. I actually have worksheets in the membership area to do this. A number two trade is where something's missing. Maybe I hesitated just a little bit and I didn't get into the trade exactly when I should have, but I followed the trade. I allowed the trade, time to move and to get to that take profit level, and I closed it right where I was supposed to. And then a three trade is I'm completely out of control. I jump in too late, or I go in too soon, guessing what I think is going to happen, right? That's a horrible thing to do if you jump in too soon. So I jump in too soon, I take profits too short and too quick, I didn't let it go to the take profit level, or I changed my stop loss, and instead of using, and I'm just throwing a number out there, I'm not saying you have to use this number, but instead of using, let's just say, a 50-point stop, I changed it to a 20-point stop, and it came down, hit my stop, knocked me out prematurely, then bounced, didn't even go to the 50-point stop if I would have left it alone, and then it went up to my take profit level anyway, and now I'm out of the trade. You can see how totally out of control that scenario is. So it really comes down to grading your behavior. You grade your behavior. When I started doing that, within 2 weeks, I started making money consistently. That's how quick and how drastic it was. I just focused on my behavior. It was the only thing that I can control. So I would role play and imagine going through my trades, doing exactly what I was supposed to do, instead of just changing it, staring at the numbers on my trading, my trading platform, looking at the dollar amount. I watched price on the charts. It's important. It's critical. That's what we're trading. That's what we're here to do, right? We've got these take profit levels here. I need to watch what price is doing here on the charts, not what's going on in my trading account balance. Scaling out. I started talking about this a moment ago. 7,000 level. This is a major psychological level. I do use these as one of these targets. The 7,000 level, the 00 is a psychological level. But at the same time, it's even more powerful when one of these psychological levels, or a take profit level, according to my trade plan, also lines up at a Fibonacci extension target. So for those of you who are not familiar with the Fibonacci tool, the Fibonacci tool works best when you add it to the most appropriate price swing structure, the structure that you see there. If it's not done correctly, if you use the tool at an inappropriate level, 2 levels like the highs and lows, it's not going to make any sense. So for example, sometimes people try to use the Fibonacci tool inside of consolidation, and it doesn't always work like that. It's not a good idea. You need a solid low that you can confirm, an A low, a B high that you can confirm, and you need to know how to do this, right? We can go really deep into all of the structure here. How do you know if it's a low? How do you know it's a confirmed high? Why isn't it this one? Why isn't it that one? Why, there's so many different levels that people can pick. You need to know what's going on here. You need to know how to identify this price movement and the structure. So we've got an A low, a B high, and then we're looking for the C pullback. And you'll notice how it tested that 618 area a few times. That solidified a lot. This is also an IMP bull crown pattern. This is something else that I teach. I'm not going to get too deep into that, but it also helps me project and confirm that these Fibonacci extension targets will actually are going to be an effective target. They'll be met. Price will hit it. It's sort of like a price magnet in many cases, these psychological levels. So again, when the psychological levels and take profit levels line up with Fibonacci extension targets, I know I've got a winning trade. I just have to leave it alone. I have to let it move to those take profit levels. You've got to leave it alone. So regardless if this was a 4-hour chart, a 1-hour chart, or a 30-minute chart, the pattern and for the most part is the same. The structure and identifying it and how I teach it in the membership course. Now, scaling out, lock in profits here at 7,000. That was one of the first things that I said to my members in the Bitcoin Boss membership area. Lock in profits. It's hit the 7,000, lock in profits. You have to lock in profits. Scale out of the trade. Now follow it the rest of the way up to the next expected take profit level here at approximately 77.27 or 77.30 or 77.20, which is a psychological level. That's another Fibonacci extension target. So again, based on the depth of the retracement, that's what helps me determine which one to pick, which extension target, Fibonacci extension target to pick. Obviously, this one's going to hit first. That one's going to hit second if it continues. So this is my second expected take profit level, the 77.20 area. We're a long way to go from here. I'm not saying buy right now. At this point, this could drop quite a ways. We have locked in and secured profits here at the 7,000 level, and we're setting the second half of our open trade, the second half of the trade, at a break-even stop. So that if it rolls all the way back down to where we got into the trade, we close out the trade, but we still lock in the profits that we earned here to 7,000. Because it's possible that it may not go up here to the next expected Fibonacci extension target. That is a possibility. And that's why it's critical that you get in at the right location and then you take profits at the right location. If you can't scale out and you can only take profits at one target, then you're done with the trade. If it moves and continues up here to the 77.20 area, we may get another pullback and another second entry opportunity to trade it back up. I would and I will be sending that information out to my members. But I can't share with you that information here because I can't tell you exactly how it's going to turn out. This may be as far as it goes. We have locked in profits here. This was my first initial take profit level. I highly recommend either getting out of the trade if you only have one position and you can't scale out of the trade, or scale out of the trade here, lock in profits, set it at a break-even stop, and let it continue to see if it rolls up here to the second target. So one of the things, though, that I want to say moving forward, obviously there are a few areas of resistance that it's running into that could sort of cap price, and again, that's why we need to be paying attention to these these key levels and taking profits. But if the whole thing is done, remember, if it doesn't go any higher and it doesn't hit this 77.20 area, we have still earned profits. It's still a good trade. It's not a failed trade. You have to scale out of trades. And if it turns around and starts to come back down towards the 5,000 or the 6,000 or whatever level, if that's what it does, then we're going to sell it. I'm not going to insist that it's going to go to that second target. It doesn't have to go to that target. It's already hit one of the targets, and I've already done what I was supposed to, lock in profits. That's the way to ensure that with the work and the amount of time that I put into this trade, I'm going to get paid. You've got to scale out. I'll explain briefly. I know a lot of people argue about scaling out. They say, well, I don't have enough money. I don't care. And maybe I should only take one target. It doesn't matter to me. I thought the same thing when I started trading. And I hired a trader psychologist because I was struggling. And this was in the first year of my trading career. It was pretty expensive. And one of the first things that they asked me the first week that I started working with them, they were a psychologist that works exclusively with traders. And they asked me if I'm scaling out of my positions. And I said, well, I can see where I could scale out at a couple of different levels, and I have a method for doing that, but I don't really follow it. I just pretty much trade one level. They said, every successful professional trader is going to scale out at different levels. They've got ways of scaling out. They've got ways of scaling into a trade, a position. Obviously, if you're using larger time frames, you're going to, ease into a trade if you think it's going to be a bigger move and it's going to take a while. All of that. It really takes into consideration the fact that, are you day trading or swing trading too? Now, for day trading, if I'm going to trade off of a 30-minute or 1-hour chart, I'm going to do the same thing. I'm still going to scale out at a couple of different levels if I can, if the market gives me the opportunity to do that. My strategy incorporated scaling out at different levels. When I applied that and I insisted on doing that on every trade from that point on, when they brought, the psychologist brought that to my attention and said, do it. I mean, it relieved so much stress because at this point, I've already made money. I got paid for the amount of time that I put into this trade. It's very frustrating when you spend a lot of time waiting for a trade, analyzing a trade, trading a trade, babysitting a trade, and then not get paid. So again, even if it doesn't, like if I only picked one target and I said, no, this has got to work. This has got to work. Okay, well, now you're not trading. Now you're not controlling your behavior. Now you're thinking that you can control price and the markets at that point. You see the difference, the psychology, the difference behind it? It removed a great deal of stress. I got paid, and I ensured that I was going to get paid for the efforts that I was putting out. And the rest of it is mine to keep if it continues. Like, I know where these targets are. I know that it could potentially go to that second target. But I can't control the market. I have no idea what's going to happen in the next hour. Something could totally change everything, right? We can see these big drastic moves. Somebody comes out with a comment. A blogger, a big major cryptocurrency site says something, news, a politician, somebody could say something, and we've seen it happen all the time. We don't know when it's going to happen. We don't know if it's going to happen. We need to be aware of these situations, these possibilities, and these things that we cannot control. All we can do is control our behavior. I'm sorry for the rant, but I hope that it helps because I get a lot of emails and they say, Joseph, can you please help me? I'm really, really struggling. I lost a lot of money. I maxed out my credit cards. I, put all of my savings into Bitcoin. I bought back in November and I'm still holding, or whatever the case is. And it really hurts to read this stuff. I really wish I could help these people, but you have to understand that you're competing with professionals. You're competing in a big business. This isn't something new. Like, trading is not new. Trading's been around for a long time. There are some really interesting people in this business, and they're very intelligent and they're very aggressive, and They take no prisoners. I mean, they don't care, right? They don't. Your loss is their gain in most cases. And you've got to remember that. And you're competing with those people. So to think that you can just max out your credit card and buy some Bitcoin, and then all of a sudden you're going to make $100,000 and pay off your house or buy a car, it could happen. That's gambling. That's like getting in and hoping, it's pulling the lever and hoping for the best and not understanding anything behind it. That's gambling. But trading is totally different. And when I first got into the trading business as a trader, and people would say, "So what do you do?" and I would have these conversations with people. I stopped having these conversations with people because of this, but many people have their own opinion about trading. And it could have been just because they were burned, right? If they tried it and didn't understand it, they'll say, it's just like gambling. It's legalized gambling. That's what I used to hear. I get tired of hearing people say that because it's not. It depends on how you approach trading. You could be, I guess, in a sense, legalize gambling if that's the way that you do it. If you have no methodology, if you have no strategy, you don't care about what's causing price to move the way it is. You don't study it. You're not a student of the markets. You don't care, right? You're just getting in because you want to make some money to buy a car or something. I meet people like that all the time. It's a difficult business to be in. It's one of the hardest things I've ever done in my life, trading. It's going to take a lot of work. It really is. It's going to take a lot of work. But I want to share these insights and this information with you just to give you a little perspective. I mean, even if you don't take this information and it doesn't matter to you, at least you understand a little more that there's a lot more to it, right? There's a lot more to what's going on here, and it can get really deep and it can get really hard and it can get very expensive to learn. Even if you don't pay for your education, you're going to pay for it one way or the other just from a lot of money that you've lost. So if this can help you in any way, if this can steer you away from making those losses and experiencing all that pain, I certainly want to try and help as often as I can. So again, please forgive me with these free videos. I'm going to make them as often as I possibly can, but I am running a full-time business, a trading business. I'm coaching. I've got a membership area, and I'm trading. I also have a private managed fund that I've operated for many, many years, and I have a lot of responsibilities with that. And sometimes it really can be 16, 18 hours a day, and there's just not enough time to get around all of it. So again, I apologize. I'm not ignoring people that are watching these free videos and sort of leaving them hanging. I know that is sometimes just what happens. I was actually in that position myself, right? When I first started trading, I didn't know who to spend my money on when I wanted to learn how to trade. So I found myself following a lot of free information, and it wasn't always kept up, right? It wasn't always up to date because they just can't. They've got obligations. They've got people that are paying them for their expertise and their knowledge, and they have to service those people first. It is just the way it works. And I apologize for that. So please be very careful. That's why I want to caution you when you're watching this video. It might look great and it might look like a target that might make sense to you, and you might want to get in right now. But please, again, me and my students, the way we're going to handle this is we've already locked in profits. I'm not saying buy right now to the 77.20 area. It's probably something that's very, very viable. I mean, it's likely. You can see it here. It looks like it could work, right? There's some old resistance and support levels over here to the far left. This is a 4-hour chart. It's a possibility, but we have a very calculated way of measuring and determining, is it going to continue? We need confirmation. We're not just going to get in and then hope for the best. We need confirmation. I'm all about confirmation. I teach how to do all of this in the membership course. So I hope this helps, but these are the expected take profit levels, and this is the 7,000 first target that we talked about from last week on the breakouts.